Singapore's economy is expected to grow around 1% this year, narrowing from the previous forecast of between 0.5 and 1.5%. GDP next year also forecast to come in at between 1 and 3%. This as the economy expanded 1.1% on year in the third quarter. Oh, that's faster than the 0.5% clocked in the second quarter. Nadirah Zaidi with this report.
Recovery in tourism and a jump in hotel takings helped lift growth in the services sector to 2.3%. The manufacturing sector continued to slump, shrinking 4.6%. This sluggish performance is expected to continue till 2024.
Some of the electronics PMIs from Taiwan, Korea and Singapore are showing some positive signs of recovery. I think that's a positive showing that the sector's worst performances may be behind us, and we look for slightly better performances ahead. I think perhaps after spending a lot on services over the past 1-2 years, consumers may be shifting and pivoting a little bit back towards goods again.
It's why non-oil domestic exports are expected to rise between 2 to 4% next year. A turnaround in global electronics demand is also expected to boost Singapore's manufacturing engine again. But the Trade and Industry Ministry warns that risks remain.
First, sticky core inflation in advanced economies could induce central banks to maintain current high interest rates for longer. Second, an escalation or widening of the Israel-Hamas conflict or war in Ukraine could lead to renewed supply disruptions and commodity price shocks. The confluence of these factors could weigh on both business and consumer sentiments, along with demand, and thereby leading to a slowdown in global growth and trade.
There are already reasons for concern. Tighter financial conditions in the US and a property market crisis in China are slowing down demand from the world's two largest economies. Despite that, analysts say growth next year will be propped up by domestic sectors like construction and infocom tech. And that will keep jobs and wages intact.
Softening labour market conditions would stabilise, and the overall unemployment rate should remain low at close to 2%. I mean, in that sense, it would mean that Singaporeans' lives would probably be less disrupted with growth starting to improve. And then this comes at a time when Singaporeans are facing other concerns such as the high cost of living.
For next year, core inflation is expected to come in at between 2.5 to 3.5%, even as economic conditions are likely to improve.